Energy and persistence conquer all things. Benjamin Franklin. My friends, the energy and the persistence, 10 to 15 minutes each and every day, you can do this. And as far as your financial well-being going forward, what does this mean to you if you can learn to accurately chart the stock market? Well, it means all sorts of things. Protecting the money that you've earned, that you've invested. It means being able to have retirement choice earlier than it might otherwise be, to have it at all. And again, we're not a stock calling service. We're an education firm. We want you to practice with us. Practice to show yourself approved. Do this each and every day, 10 to 15 minutes. You may not be good at it at first, but if you stick with it, you will learn the simple things that mean the most. All we are doing here is following price action. We watch weekly vertical crossovers occur. That's basically when we have decent volume around the time of the turn, like we see back here on the 13th of March, where the bottom of the market hit with all that volume, where it found a bottom. And then with decent volume, the next week started moving up. That's 12% right there, my friends. And of course, we jumped in and caught the first 2.70% with half of our trade and then let the rest of it ride. And you can see those turns over and over and over again. Here's our one big fake out. That was last year, the 31st of May, where things again turned around, but not to be fooled completely on that. Why? Well, because of course we can see what happened. We can see there wasn't a great deal of volume. Things then went back over and then hammered down nicely, slid sideways a little further, and then back up again. But again, teaming volume with weekly vertical crossovers typically portends the best types of moves. So let's jump into these charts, see where things are. The market rebounding on everything but bonds. And of course, we're in that bond down move in TBF, the ProShares single short of bonds. We'll get to that in just a minute. Let's see what's happened with the S&P 500. Of course, we jumped in and captured the first 1.83% down move. Bonds have moved back up after that, and we are getting to the pullout point. Actually did hit it at one point here, did not stay there. So again, you could have already had your stop loss set. You took 1.83% on the first half of that move and sold this afternoon when it hit it if you had a stop loss there, or you're just waiting to see, just like we saw here when things originally moved down and then back up and then down again. Maybe you're waiting to see what happens this next week and you're willing to let things ride a little longer. That's the kind of choice you get when, again, you do set a decent point of profit. And of course, what do we use? We use 2 times the average true range, which we find on our 2-day chart. It is just that easy in setting these profit and loss bands. If you're not sure everything I'm talking about, but it sounds like it makes sense to you, start tuning in every day. Also, go to the channel and subscribe at chartingwealth.com. You get trainings each and every day in the email that we send out to you. That list is never spammed, never shared. If you're even more interested, particularly in learning how to practice trade options, then you can, of course, become a member, a Patreon supporter at our Patreon page at any of the 3 levels. The first thing you get is our Options Made Simple, the Charting Wealth Way. So we see that, again, the S&P up for the day 1.19%. We haven't broken on our 2-day chart. We haven't broken the weekly trend line. We're sitting right there on it, trying to push through on the half-day chart. We'll see what that does Monday morning. Now, that's where we are on the S&P. Things aren't as bright, haven't been as bright. We've been talking about that the whole time on the NASDAQ 100. We never hit our sell point on the NASDAQ 100. This is QQQ, or of course PSQ is the single short, which is what we bought in our practice trade. But as we look at this, I'll show you, I'll blow this up. You can see where we had our buy-in point back on the afternoon of Friday the 22nd of September. Things did go down, did not get to our sell point, then popped back up, then back down, and then jammed up in the afternoon. It hasn't hit the absolute out point yet. If that is something you've already pulled the trigger to get out of, that is fine. If on Monday we see the market further accelerating up, then of course we would pull that trade and step out of that position. When we analyze it, looking at where things are on the weekly, you can of course see that we have a spinning top, lots of indecision this week. We've not penetrated that weekly trend line. The 2-day has been sliding sideways and actually closed just above it, as did the half day. So there are warning bells going off. If you went ahead and pulled that earlier, don't fault you for doing that. Of course, you never have to ride up that loss band all the way. But again, we shall see how things continue to move and if we do get an all sell signal as the week starts. Now, more bright news as we go to 20-year bonds. Of course, we pegged a 2.10% gain in a down move on bonds. TBF is the inverse fund for bonds. That's what we buy in our practice trades when bonds are going down. And of course, things have further accelerated after that. You can, of course, see we were only in for just a little over a day. Things have continued to move down, plunging again today, 1.21%. It's just been a beautiful descent. Or if you go to Tango Bravo Foxtrot TBF, the ProShares short of the 20-year U.S. government bonds, you can just see that beautiful profit, just a hammering up. So again, that's the way we like to see it. You take the good with the bad, you pay attention, and of course, what do? This is what covers you for the losses, and that is allowing your gains to run. That is why we sell half the trade when we hit 1 ATR, and of course, we then let the rest of it ride. And if the market starts to take back some of its own money from us, we can, of course, pull that trade. But the beautiful thing is you have things happen like they did. I'll just go back to the S&P 500. After we grabbed the first 2.70% of that up move that started in March, you can see where we had that strong down move where the market bottomed, gave us, what was that, 2.63%, and then turned around, gave us 2.70%, and then we let the rest half of that trade run up for 12+%. That's beautiful. That is what's called allowing your profits to run. And then when things don't work, and the market is never 100%, nobody can call it. Nobody knows what's going to happen. So what do? We cut our losses and we let our gains run. That's the way you do it to have the market return to you. I don't ask you to believe me, my friends. I never, ever do. I ask you to practice yourself and see if it doesn't work for you. What we ask you each and every day is don't spend real money. We're not about telling you what to do. We're about giving you tools so you can experiment, so you can try, so you can prove it to yourself. But I tell you how it won't work. It will not work if you don't spend at least the 10 to 15 minutes each and every day. You cannot spend 3 hours on a Sunday. It will not work. You will not figure it out. It needs to be a little bit of time each and every day. And surely, if I can do this in my schedule each and every day, record this show, bring it to you, do all the back work on this, and still manage to handle everything in my life, I absolutely know you can. Let's move on to gold. Gold up a little bit for the day, 0.52%. Gold has been very good to us. Of course, as we look at gold, what has it done? Of course, it ran down and bottomed out back on Thursday. And we, of course, hit our sell point right there. And it again, what did we get on that? 1.69%. Now it's turned around a little bit on the other half we let run. Has gold turned around completely? I don't know that. As I look at where volume is, where we are on the 2-day, where we are on the weekly, huge week, above average volume going down. We'll continue to keep an eye on it. We've already taken that first chunk out of the first half. We'll see how this second half continues to ride. Now, Bitcoin popping up 1.97% going into last week. There just wasn't much that happened in Bitcoin. You just see a little, let's blow that up so you can see exactly what that candle looks like. That doji from last week. Week before, though, it had popped up. This week it's popped up some. How has Bitcoin reacted this entire year? Well, you can sure look at it and you can see how the year started off after Bitcoin bottom. It pops up and rolls back, pops up and rolls back, pops up. This last time, basically the high during the week was the high that entire 4 weeks and then rolled over. Looks like it's trying to move up again. That's the modus operandi we've seen in these latest moves in Bitcoin. Of course, before that, it would pop up and trash down, pop up a little bit and trash down. It's a little different this year. So we do see Bitcoin this week. Now, again, nothing to write home about. As far as volume goes, below average on the weekly chart. Hard to find a lot of a pattern here. Not the way we look to trade things. But again, you guys ask me to chart Bitcoin for you. I'm doing the best I can with the tools that I have, and it ain't easy. However, please make sure to watch Charting Cryptos, Commodities, and Currencies. You may get more out of what I teach on that training for this week, particularly looking at the weekly chart on the 24-hour-a-day Bitcoin chart. That might help you a little more. So check that one out. I'll be opening that up to the public. It's been locked down just for the Patreon members. Up until today, I always release it on Fridays. Thank you, my friends. You appreciate what we do. Be sure to like the video. Be sure to subscribe to the YouTube channel. Subscribe to our daily and weekly reviews, where, of course, you'll get those special trainings each and every day. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.